The ride on the global gravy train is over. We can't live beyond our means anymore. Americans are going to see a huge decline in our standard of living and a big drop in their net worth. This is going to be a financial crisis much worse than 2008. Well, I mean, this is something that I've been predicting for quite some time now. It was inevitable. I always thought it would be an external dollar crisis that would set these events in motion. I didn't realize that we would do it to ourselves, but we have. We've pricked our own bubble, and there's a lot of air that's going to come out of it. Donald Trump looked at our huge trade deficits and just concluded that the trade deficits themselves were the problem, and that they must be the result of foreigners cheating us and ripping us off. The reality is the trade deficits are the symptom of the problem. The problem is here in America, and we're not getting ripped off by anybody. Nobody's cheating. The problem is we as Americans, for decades now, have lived beyond our means. We consume more than we produce. Now, how is that possible? Well, we go into debt. We sell off our assets. We outsource our manufacturing, and we borrow money. And, we get to live a standard of living that's higher than what we're really entitled to based on our collective productivity. Now, it's the rest of the world that makes that possible. They produce what we don't. They buy our assets and they loan us the money. And so what does that mean in America? Well, we have more stuff to buy at lower prices. We get lower interest rates because of all this foreign capital, and our stock prices are higher. So we get to be rich on paper because we have a high stock market, and we get low interest rates and low consumer prices. Now, according to Donald Trump, that's the world screwing us over, ripping us off. And he wants that to stop. Well, if that stops, now, the ride on the global gravy train is over. We can't live beyond our means anymore. So we have to live within our means, which means we have to consume a lot less. We have to save a lot more. It means that our interest rates go way up because we're no longer borrowing all this money from foreigners. Our consumer prices go way up because we're no longer getting all their stuff. Our stock prices go down because they're not buying our stocks. So Americans are going to see a huge decline in our standard of living and a big drop in their net worth.
This is the wake-up call. Schiff is arguing that the American middle-class lifestyle has been artificially propped up by foreign debt. If this bubble bursts, your purchasing power vanishes overnight. If you want to know how to protect your family's wealth during this reset, make sure to hit that like button and subscribe right now.
But I mean, that's liberation, right? That's, I was warning that Trump was threatening to liberate us from our standard of living and liberating us from our stock market wealth. And that's what's happened. And it's just starting. This is going to play out for the rest of the year, next year. This is a huge trend that's just going to get more and more momentum.
I mean, this price action's been wild to watch. We're seeing this massive move rising nearly $600 this year alone. We know some of the basic major drivers. Obviously, we covered extensively here, central banks, what have you. But what's behind this surge here? I mean, what do you think is going to be the next year here in the gold market?
Well, gold's up over $250 in the last 3 days.
Yeah.
Right. So we're accelerating. Last couple of days, we were $100 a day, and maybe we'll be up again. Maybe we'll be up another 100 by the time, they close today's trading. But what's happening, and what I've been telling people was happening all last year, as the price of gold went from 2,000 to 3,000, and nobody cared, and nobody was buying it because everybody was, sidetracked by Bitcoin and all the talk about digital gold. Nobody but foreign central banks were buying actual gold. And the reason they're buying gold is because they're getting rid of their dollars. They are preparing for a world where the dollar is no longer the center of the monetary system, where it's no longer the reserve currency. And so if you're going to get rid of dollars, what do you replace it with? Well, gold is the most likely alternative to the dollar. And that's what they've been doing. Although I think recently central banks are probably also adding euros. I've been telling people to buy gold, for over 20 years. When I first started recommending physical gold to my clients, it was under $300 an ounce. It's gone up more than tenfold. In fact, gold has outperformed the stock market for the last 25 years dramatically. I think the S&P is down maybe 65% priced in gold. So the whole bull market is an illusion created by inflation.
This is a critical distinction. We look at the S&P 500 hitting all-time highs and think the economy is strong, but Schiff says that is just an inflation illusion. When priced in gold, the stock market has actually been crashing for 2 decades. It is not growth, it is currency devaluation.
Gold lets you see economic reality. But really, for the first time in my career, I'm actually telling people that for now, don't buy physical gold. Just wait, because even though the gold stocks are at new 52-week highs and they're up maybe, I don't know, 15, 20% and they're jumping finally. But gold stocks are much lower, than they were a few years ago or 10 years ago or even 20 years ago, a lot of them. Gold stocks are dirt cheap. And the reason for that is central banks aren't buying gold stocks. They're just buying the physical gold. But they buy the physical gold that the gold mining companies produce, and their profits are about to skyrocket because oil has never been this cheap in history relative to gold. That is the biggest cost for these mining companies. They're trading at single-digit multiples. Gold mining stocks have never been this cheap, not only relative to gold, but relative to the S&P 500. They're giving these stocks away. When you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year, but that's not that big a gain from 3,250. But I think if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. So rather than making 25%, make 500%.
Here is the investment strategy of the decade. While everyone is chasing physical metal, Schiff says the real asymmetric trade is in the miners. Because their costs are fixed and gold prices are rising, their profit margins are about to explode. He is predicting a potential 5x return in this sector.
By buying the gold that's still in the ground.
Analysts, investors, again, we're getting into that question whether or not Beijing might start offloading in response to these tariffs. You were just talking about Europe, too. If this happens, what impact could it have on the U.S. and global financial systems? But more importantly, can the Fed step in fast enough if the confidence of the U.S. sovereign debt collapses, or is the policy window already closed?
Well, I think that there is going to be a massive loss of confidence because it's been a confidence game the entire time. But look, this is going to be a financial crisis much worse than 2008, but it's not going to be global. It is a U.S. crisis. It's not a global crisis. It's actually liberation for the rest of the world because they're going to be liberated from the burden of supporting the U.S. economy. That means more for them. We've been living above our means. Well, that's only possible because the rest of the world has lived beneath their means. Well, they don't have to do that anymore. They don't have to produce stuff for Americans anymore. They don't have to loan their savings to America. They don't have to invest in the U.S. financial markets. They can invest in their own markets. They can consume their own goods, right? They can invest their own savings. So our loss is their gain. And so this is going to be a global boom. It's like a giant weight has been removed from them. And now the global economy can be a lot stronger without having to drag the U.S. consumer behind.